Just a basic set of principles. First of all, Bitcoin is the apex property of the human race. There is no property invented in the history of mankind that is better than Bitcoin. Not land, not gold, not silver, not stocks, not bonds, not the giant stone coin of the Yap people, not NFTs, not art, not baseball cards, nothing.
I love it.
Okay. So it's the apex, it's property. It's also the longest duration asset. That means there's no reason you can't hold it for 100 years.
Yeah.
It's better than owning all of Manhattan. It's better than owning, the center city blocks of the greatest cities in the world. This is like Manhattan in cyberspace. One day 1 billion people will live there, then one day 5 billion people will live there. So I'm telling you, 5 billion people are going to want to own property in cyberspace. There's only 21 city blocks. How long are they going to want to own that property? How about like 1,000 freaking years?
Yeah.
Right. Like there's no reason why the property isn't good for 1,000 years. It's an open software protocol that's only going to get better over time. The English language has been around for quite a while, right? How about Arabic numbers? Been around for quite a while.
Yeah.
A protocol can last a long, long time. So we've got this issue of, is it long duration? Yes. Is it high quality? Yes. When should you ever sell an asset? The theoretic, and this is why people like the models are all just misleading people to make awful dilutive decisions, destroying their wealth. The only time you should sell an asset is when you have knowledge it's going to be impaired, right? You can't take it with you. It's going to be impaired and you can't finance it to buy the next asset. Well, this is not going to be impaired. This is property in cyberspace, right? And there's nothing better to buy. There's nothing better to buy, right? I mean, I'll say it a third time. There's nothing better to buy. So if you're buying something which is potentially going to last hundreds of years, and there's nothing better on earth to buy, why would you ever sell it? Yeah. So that's the first point. You're trading it for what? Trading it back for, you're trading a strong asset for a weak asset. In nature, there's a flow from the energy flows from the weak to the strong, right? Water flows downhill. Energy flows from the weak to the strong. In free markets, capital flows from the weak asset to the strong asset. In currency markets, it flows from the weak currency to the strong currency. So it doesn't really make sense to trade out of that ever. Let me make one more point. All those models, they're irrelevant. As I say, they're irrelevant. All like the 4-year halving, irrelevant. All your back tested models for the past decade, irrelevant. They're all based on history. Okay. They could only be relevant if there were no external actors or external energy sources. When Godzilla comes to the playground, your models of who's going to win the pinball tournament are irrelevant. You could tell me, I've been at this pinball tournament for the past decade, and I know that always like the two dudes on the left side of the table win because there's a tilt in the table. When Godzilla blasts your pinball table, it's irrelevant. So the halving, what does that mean? It means nothing because all these miners are coming public. And as they come public, they're going to have access to infinite, cheap, or free capital. They're not going to sell any Bitcoin. They're going to buy the Bitcoin. Stock to flow is going to infinity. Then stock to flow is going negative, right? When all the exchanges and all the miners of Bitcoin are public, there's no reason why they couldn't issue billions and tens of billions of dollars of equity and debt and buy Bitcoin. Why would you buy Bitcoin? Well, my investors want the Bitcoin. Well, what if the investors don't want the Bitcoin? What if the investors hate Bitcoin? Well, if investors hate Bitcoin, they're not investing in publicly traded Bitcoin miners, are they now? Right? Nobody's investing in a publicly traded Bitcoin exchange or publicly traded Bitcoin miner or publicly traded Bitcoin company if they hate Bitcoin. So as the shareholders rotate, what you realize is there's no rational reason for anybody that ever earns Bitcoin or creates Bitcoin to ever sell the Bitcoin, which means that the stock to flow doesn't matter, which means the halving doesn't matter. What matters? What matters is when someone shows up with $20 billion and they want to buy Bitcoin, that matters. What happens, if Tesla buys 10 billion in Bitcoin instead of 1 billion or 1.5 billion? That matters. Is that in your model? No, it's not in the model because no one ever did it before this year, right? So you couldn't have it in your model. So that's why I think the models are only interesting in a closed adiabatic system with no new actors, with no new developments. But there's a pretty big development here. It's $400 trillion worth of monetary energy sitting in weaker assets.
Yeah.
And so another way to say it is 400 trillion gallons of water that are in a reservoir uphill from you. And if I poke a hole in the dam, that 400 trillion gallons of water is going to want to flow downhill. And when that flows downhill, it's going to wash out your hedges, your playgrounds, your cities, every beautiful structure you've built, your sculpture, your artwork, your ports, your fleets. Everything is going to get negated by the 400 trillion gallons of water flowing downhill. And so you really got to keep your eye on the dam and figure out at what rate is the monetary energy in the rest of the universe entering Bitcoin, because that is going to dictate everything much more so than any model. So hopefully that answers your question, right? Like, no, we're not selling it. We're not trading it. There's no exit.
You're not getting interest on it either. You just got it. You're hodling it.
It's a very simple idea. Wait for the water to flow downhill. And by the way, stay kind of out of the way of the water.
Yeah.
You want to make money on this, set up a little turbine. And as the water flows downhill, turn the turbine and you can extract some hydroelectric power off of the water flowing downhill. We weren't going to grow 20, 30, 40% a year. We weren't, the next screaming Zoom. We were going to have a stable, mature business that made a lot of money. And we had a block of $500 million of cash on our balance sheet. And I realized that no one cared, and we were viewed as being utter failures, almost to be discarded by Wall Street. It's almost like no one in the world wants to invest in a company that generates cash that's well run with a huge amount of cash.
Yeah.
And I thought, what is wrong with us that we're so hated? Like you have a decent business. You run a restaurant and you've been serving people for 30 years and it's a great restaurant. It's the best in the city. And when somebody shows up and they tell you your restaurant stinks, you're awful, you should just roll over and die. You think, what? Really? And so we realized that we had a good business and had a lot of cash, but the investors valued the cash at zero.
Yeah.
And they valued zero growth at zero. And then we started asking the question, why is it that the world values excellence as zero unless it's hyper growing or parabolically growing? And why does the world value $500 million at zero? And that got me thinking. And what I realized is cost of capital had gone from 8% to 20%. And they were discounting the cash. And the assumption was $500 million of cash is going to be worth nothing in a decade. And I thought that kind of scared me. Mm-hmm. And the next thought was, if you can't grow your company 20% a year, it's worth nothing. Yeah. Well, okay, so why is it worth nothing? And the answer is because the currency is collapsing. And so once you understand that, then you realize you've been put in this quandary by fiscal policy, which is if you have a company and you can't grow at 20% a year, you're going to fail. And then you realize that if you're an employee, if you're working for a living and you're not raising your salary 20% a year, you can't keep up. And once you realize, and then you understand why, once you realize the why is because we're discounting the cash flows at the risk-free rate of 20%. And at a discount rate of 20% or more, nothing works. That causes you to realize that the only strategy for survival is to become asset rich. And of course, we saw that with the K-shaped recovery. Every Wall Street finance company had the best year of their life doing very little, right? Like if you'd done nothing and just held the S&P 500, you're up 35%, which is like the best year in a decade, doing nothing. Okay. And then every Main Street company had the worst year of their life. If you manufacture things with manual labor and people, it was horrifically difficult year. And
Yeah.
if you did nothing but held stocks, it was your best year of your career. And so once you understand that, you realize that you can't succeed in business. And by the way, you can't succeed in life if you don't actually create an asset portfolio of high quality assets that will appreciate in value faster than the rate at which the currency weakens.